Joshua, advisors and their clients are always looking for reliable income and reliable income sources. So where do you see the biggest opportunities in both the debt and equity markets to grab that reliable income right now?
Yeah, Greg, and at Franklin Income Investors, it's why we believe the pursuit of reliable income is best done in a multi-asset approach where we can navigate across stock and bond markets. And sometimes that's where the opportunity is. Other times it's at the sector level, and sometimes it's at the individual company level. So right now at Franklin Income Investors, we think agency mortgage-backed securities are an attractive opportunity for income in the bond space. And then on the equity side, it's far more idiosyncratic, company by company look at that market.
And you recently released the Franklin Income Focus ETF, the ticker is INCM. So how does your outlook on both the stock and bond markets inform the way you're managing this particular ETF?
Yeah, in INCM, we are trying to deliver high levels of monthly income with prospects for capital appreciation. So we'll dynamically navigate across stock or bond markets. And right now, we believe the right idea is to be well diversified and to stay nimble and dynamically find opportunities in all of our available opportunities right now.
Can you dig a little bit deeper in terms of the flexibility that you're offered in this particular ETF? There's passive ETFs out there, there's active ones. So how do you manage this one?
Yeah, so being diversified and dynamic are hallmarks of the strategies that Franklin Income Investors runs. And we will navigate across fixed income or equity or hybrid security markets, which are often an under-owned area by advisors, to take advantage of income opportunities as they present themselves.
So how do you balance, and this is the infinite question, yield generation with risk management?
Great question, Greg, because we believe you should be looking at yield through a risk-adjusted lens. And when you're looking at income generation through that risk-adjusted lens, it's very easy to see why being diversified is the right approach. In our portfolio, we have not only coupons from bonds, but also dividends from stocks, which create a portfolio of more consistent and reliable income for our investors to get that high level of monthly income with prospects for capital appreciation.
And why is the ETF wrapper the right approach? Because you can do this in a mutual fund or you can own the stocks and bonds individually. Why an ETF?
Yeah, well, Greg, because our clients have told us that. The ETF wrappers become increasingly important to our investors, and we always want to make sure we offer them choice. Franklin Templeton as a firm has a 7-decade track record of generating reliable multi-asset income for our investors through our flagship Franklin Income Fund. This is the next evolution of that, taking a multi-asset income strategy into the ETF wrapper, because that's where our clients are telling us they need it.
So finally, how should advisors utilize this particular ETF? Because you have stocks in it and you have bonds in it, and they might have, for example, an index fund with the same stocks in it. So there might be some duplication there.
Yeah, Greg, I spend a lot of time sitting down with our clients, and there's really 3 ways I advocate allocating to the INCM ETF. And the first way is as a standalone. We're broadly diversified across the equity market and the credit spectrum. So if you have an investor who's an income and growth investor in that order, very easy to see us as an important part of that portfolio. If you're building a model portfolio for income, which has become an increasingly popular thing for advisors to do, the INCM ETF is 30 to 50% of an income model. It sits at the keystone of that model where you can allocate around it while we show up with monthly income and prospects for capital appreciation. And finally, we're a great complement to a total return portfolio. The 60-40 portfolio that is heralded for its performance over time can struggle at inflection points. So you take that 60-40, you make it a 50-30-20, you help navigate inflection points in the market and use INCM to dynamically reposition just a part of that book.
All right, well, thanks for coming on and talking about it.
Thanks for having me, Greg.